José, thank you so much for joining us here at SuperReturn International. So that's finding value. What do you see is happening and what have you learned from previous cycles in terms of valuations in this market?
Yeah, what you tend to see is when valuations in the public markets go down, in private markets should go down as well, but it takes longer and typically it's less pronounced on the way down. But in private markets, you have two sides of the equation. One is the invested portion of your portfolio. The other one is the committed capital that is ready to be deployed. These are exactly the right times to put money to work. So there's an opportunity and a threat in our existing positions, but this is the right time to actually start committing more money and be able to make investments at a much better valuations.
And what do you expect to see and are seeing at the moment in terms of secondaries as well?
Well, the secondary market will take time. When you see valuations coming down, what you typically see is that it takes a little bit of time to see transactions being completed, because you want to see how these valuations in private markets adjust to the new level. And it typically takes 1 or 2 quarters. We saw that in COVID, where 6 months you saw very little transacted volume. But we think this time will happen something similar. Probably you'll see a slowdown in activity until valuations really go to the level that it is, where prices get adjusted.
And in terms of that sort of muting or slowing down, is that also to be seen in terms of fundraising?
Well, fundraising is a good question because people say that there's been a flood of money going after private markets. Reality is that it's been very concentrated in a few big names. So big names and good stories really get sold very quickly. Some people are struggling, so you have a little bit of a barbell story in that regard. So I think valuations will impact because of the denominator effect. As valuations in public markets go down, the position that some investors have in private markets go up artificially. So that will probably produce a little bit of a slowdown in terms of the appetite of some institutional investors. However, we see that compensated a bit on the private banking side where there's significant demand.
What would you hope somebody took away from a conversation with you this week, just finally? What would be your key message of the week?
Well, I think it's time to be very prudent. I think we are all stewards of capital, and I think we need to be not conservative but cautious. We are seeing very, very difficult times from a geopolitical standpoint, interest rates, inflation. There's a lot of uncertainty out there, but the beauty is that we have a lot of patient capital. So it is the time to really reflect on which sectors have good tailwinds, which ones have difficulties for the next several years. So it's time of opportunities, but it's also time for being very patient and being very prudent.
José, thank you so much for sharing your thoughts.
Thank you very much.